In business today, three things to know. First, for Janet Yellen, it's easy does it as she plans a slow approach to raising interest rates. But the markets are at odds in figuring out exactly what the Fed said today. Then, is it over for the UK and Scotland? We'll have the latest polling a day before the Scottish independence vote. And oil gusher, how the U.S. has become one of the world's leading oil producers and why that's driving down prices. Arise Exchange starts now. Hello, everyone. I'm Andrew Schmertz. Depending on who you are, you may have received two different messages from the U.S. Federal Reserve today. On paper, the Fed sounded a tad more hawkish on interest rates, that it might raise rates earlier than expected. The bond market certainly reacted that way, but Fed Chair Janet Yellen was in all-out easy money mode when she spoke, saying rates will remain low for a considerable amount of time. The labor market is not as strong as they would like it to be, and inflation is still below the Fed's 2% target. Here's a little of what the Fed chair had to say, and then we'll make sense of it.
Regarding interest rates, the committee reaffirmed its forward guidance that it likely will be appropriate to maintain the current target range for the federal funds rate for a considerable time after the asset purchase program ends, especially if projected inflation continues to run below the committee's 2% longer run goal and longer-term inflation expectations remain well anchored.
As Yellen mentioned, inflation is one key indicator the Fed claims to look at and will right now have trouble finding it, at least based on the government numbers. The Consumer Price Index, which measures retail inflation, came in flat at 1.7%. If you include food and energy, prices actually fell 0.2%. The market traded in a tight range ahead of the Fed announcement, but then finished in record territory. Let's take a look at the final numbers. The Dow Jones Industrial Average up 2488. That's a record to 17,156. The S&P 500 back over 2,000 to 2001. And the NASDAQ closing at 4562. Taking a look at commodities, gold down and oil pulling back 73 cents to 94.15. David Weild, CEO of IssueWorks and chairman of Tuesday's Children, a charity that helps 9/11 victims and their families, joins us now to talk about the Fed and more. Terrific organization, of course, Tuesday's Children. We had them on last week. All right, so what did you hear from Janet Yellen today? Because the market's sort of like maybe a little confused.
Yeah, I don't think it should be. I mean, if you look at the demographics in this country, you've got baby boomers who are retiring, which takes demand out of the equation, if you will. So there's not a lot of pressure on prices. You also have a world which is pretty unstable right now, which is supporting the dollar. So imported goods, I think, are going to be, cheaper on average. So I think that the environment is such that we're, if anything, I think probably the Fed is a little bit concerned that we move into deflationary territory.
I was about to ask you about that. Whenever inflation goes in the other direction, you start worrying about deflation, and they don't really have weapons to battle that. But we're not Japan, certainly.
Well, we aren't, and I think the Fed has been right to be very accommodative, and they have been for a considerable period of time. We also have more quantitative easing at our disposal. So, for instance, the Fed could go out and buy more Treasury bonds and retirement, put more cash into the market if it needed to. So, but I don't think that the Fed is under any pressure anytime soon to try and raise interest rates. And I think that's how the market reacted today, with the stock market up significantly, and you saw commodity prices, gold was down, and there's not a lot of inflationary pressure out.
But the bond market saw something a little bit different. I mean, is it just that they misinterpreted it, or?
Well, I'm not sure. One day it's kind of tough to understand, and I think that I don't think that bonds are going to trade off materially anytime soon. But I mean, look, interest rates are so incredibly low, and they've been incredibly low for a significant period of time that the entire market has been calling almost every month for an increase in interest rates that hasn't occurred.
And it hasn't occurred. She's been holding that back. We've been seeing a drive of IPOs recently, and part of that maybe is something called the Jobs Act, which you were part of. That has helped small businesses, define small as less than $1 billion, I think, in market cap.
In revenue.
In revenue, get to the market quicker. How do you think that is working so far? President Obama signed it about 2 years ago?
Yeah, it was I was actually at the White House for the signing, which was one of the great delights of my life. It's April 5th, 2012. The interesting thing is that there are 4 titles that are actually pro-capital formation, and 2 of them are still not implemented. One is the public crowdfunding, and the other one is what we call Title 4, which is Regulation A+, it's called, which is actually kind of an IPO light. And we're still waiting for those regulations to
What's
be
interesting about
passed.
crowdfunding, because this relates to both public companies that want to go public,
Right.
but also companies raising money in the private place. And small businesses have long complained that the regulations were just simply too burdensome. Crowdfunding allows accredited investors, I understand, to get in, providing they prove they're accredited investors.
Right. That's Title II of the Jobs Act, which actually is in effect now. It actually came from a recommendation we made in an earlier study called A Wake-Up Call for America. And it's what we call the repeal of the prohibition against general solicitation. So now you can generally advertise. And this is a revolution. There's no question.
Absolutely.
I mean, we're seeing companies financed, and in fact, last week, there was a company called Rewalk that went public, which is the one that does the exoskeletons for paralyzed people. It went public. It was actually crowdfunded.
And we're running out of time, but one of the key here is before, just institutional investors, big investors, could get into these deals.
Right.
But crowdfunding, in theory, also will allow the everyday investor to put a little bit of money in.
Earlier stage companies, absolutely.
And benefit from the next big startups.
And the IPO market is the best it's been since 2000, the end of the dot-com bubble. I don't think it's a coincidence. The Jobs Act is helping.
And David, we'd love to have you back at some point to talk more about crowdfunding. It's very interesting.
Love to.
David Weild, CEO of IssueWorks. Thank you so much.
Andrew, thank you.
On Thursday, Scots will choose either the Union Jack or to go it alone. It's the vote for or against independence that all of Europe, and now here in the United States, is watching, with great concern over the economic impact of Scotland seceding from the UK. The latest polls have supporters remaining with the UK, leading by 4 percentage points, but it keeps shifting. Michael Traboulsi is a freelance reporter covering the vote, joins us now from London. Michael, we haven't really talked all that much about how the British feel about this. Since you're in London, can you give us a little bit of an overview? Do they care?
Yeah, well, good evening to you. Everybody cares. It's what everyone is talking about at the moment. All the newspapers are full of it. All the radio stations are full of it. It's the big thing that's happening. And yeah, people do care, because I think the fact this is new territory. People have never been in a position like this before, where they've got to decide, do they want to break with the United Kingdom? So decisions are being made with the heart, very passionately being made with the heart. And as a result of that, everyone's got something to say. They've all got something to say about it. You mentioned that poll just then. A poll in the last few moments, in fact, has been released, which puts it even closer. There's only about 1 or 2 percentage points in it. But at the moment, as it has been definitely for the last week at least, the No campaign has just got the edge.
Yeah, just got the edge. Is there a certain demographic of Scottish that want to go it alone?
Not really, no. It's based across the whole of Scotland, and that, I think, is what has maybe surprised people, because usually there's, like you can imagine, there are sort of hotspots in any area which has got sort of an allegiance to one side or the other. But what we're seeing is quite unprecedented. There are people in every single corner with different views. There could be neighbours, they could be people in flats living upstairs or downstairs with completely different views. You've got those who are saying, we are part of the United Kingdom. This model has been working for 300 years. Why break something? Why risk your economy? Why risk the healthcare system? Why risk the infrastructure when it all works? The Yes campaign at the moment saying, yes, let's split up. All that they're campaigning about is based on, the unknown. People don't know what's going on. The No campaigners, they're adamant that, it's the right thing to do. It's to keep the United Kingdom together. If it's not broken, then why try and fix it?
Well, I think we've come a long way, certainly, that you get to vote now to secede from the UK, right? And so maybe the British aren't so thrilled that they allow this vote to proceed. There is a real concern over the economic impact of this in Great Britain. What are you hearing could happen if Scotland goes alone?
Well, of course, as always, it depends on who you're hearing from. A poll of Scottish entrepreneurs just a couple of days ago, 9 out of 10 of them said that a yes vote will be an absolute disaster for Scotland. They're saying, don't do it. Tick the box that says, let's absolutely stay together as part of the United Kingdom, because they're worried that should Scotland say, yeah, we're going to go it alone, that in order to actually fund that move, the entrepreneurs are going to be hit because the taxes are going to have to be boosted in order to actually try and pay for this big change. A sports retailer was on the radio this morning, one of the big UK sports retailers, saying from their studies, they've looked at a yes vote and a no vote, and actually they can't see any impact at all on prices. They don't think they'd make any difference whatsoever. But of course, jobs are going to be hit quite hard. And again, it depends on who you're listening to. But a lot of the tax offices are based just outside Glasgow in Scotland. And because of tax law states that you can't actually store private personal details outside the country which they're from. So suddenly, if Scotland was to go it alone, there'd be a foreign country, which means that all those tax offices would have to come back to England, and that alone is 8,500 jobs.
And it should also be noted that they don't get membership into NATO, and they don't get membership into the EU. And, Americans think of Scotland when we, pour ourselves a glass of Glenlivet. So it's certainly more in the news than ever. And we're seeing lots of pretty pictures, by the way, of Scotland. So maybe it'll help tourism. But the Americans are getting nervous, too, because we could be in a position of sort of bailing out countries in Europe.
Yeah, well, with Scotland, the Yes campaign are really relying on the North Sea oil when it comes to actually funding this project. They're saying that, this is the North Sea, it's Scottish oil, and therefore there is tons of it in the ground still. And from a funding point of view and a commercial point of view, there's enough there. They're going to keep it going. It will keep the country alive. The No campaigners, they're saying, actually, you've got resources which in the next few years are going to run out. And then that's right. Suddenly people are going to have to start bailing out Scotland potentially. And maybe that does fall on America. Okay, Michael Traboulsi, an excellent analysis today. We will talk to you again. Thank you. Coming up, meet the new king of oil. It is us. You are watching Arise Exchange.
I think media and reporters have a lot to answer for.
AIDS, hunger, people not having running water, the things that we just take for granted.
I think the most important issues in the world today are education and poverty.
Terrorism and war, I guess, is always. It's always an issue, and the quality of life of certain groups of people in certain areas.
I think inequality.
Arise News, every culture, every angle.
Informative. The U.S. economy is on the right path, and the wizard of the Fed is leading the way.
We started our companies originally to create something that made a positive difference.
Compelling.
I became very successful, not allowing myself to be average.
Our favorite person of the day, when we pick one person who grabbed our attention, and not for the right reason. Yeah, he sort of lost all business. Investors came back from the long weekend, tanned, rested, and ready to buy stocks. Entertaining money daily. Arise Exchange. Welcome back to Arise Exchange. The U.S. is the new oil king, surpassing Saudi Arabia and Russia in oil production. Just last week, the U.S. produced as much as 8.8 million barrels of oil in one day, the most it has produced in 28 years. Joining us by the phone to talk about the boom in U.S. oil production is Charles Nedoss, Senior Market Strategist at LaSalle Futures Group. Charles, welcome to the show.
Thank you for having me.
How did we get here? We kept hearing about having to import oil from the Middle East all these years. For those of us of a certain age, we remember the oil crisis of the late 70s.
Yes, I do. I remember the lines. I remember the odd and even days, as a matter of fact, here in Chicago, in terms of getting gas. Most recently, the answer is good old American technology. If you look, we had when natural gas really attracted the production. There's an old adage in commodities that what's the cure for higher prices is higher prices. And what that does is it tends to bring out production. Mm-hmm. When natural gas spiked to about 14 and then came back to about 2, you had a very large availability and very profitable lease rates on rigs that basically went from producing natural gas to producing oil. At that same time, fracking technology was also really, starting to come into production, something that just wasn't a thought, but was actually ongoing.
Yeah, I want to ask you about fracking. I want to ask you about fracking in a moment. So some of it is technology, right, that we can find more oil, but also
I'm sorry?
But a lot of it is also that we've sort of changed our policies a little bit. We're drilling in more places, aren't we?
Yes, we are. We're most definitely we're drilling. We've upped the production here, but you also have to look at it too. Is on the other side of the equation is the demand equation. And in terms of our technology, in terms of the automobile, if you take 10 years ago, what your average mile per gallon on a car is, and what it is now with hybrids and stuff, again we're being a little bit more frugal in our use as well. Most recently, a lot of the price weakness is also associated with the stronger dollar, believe it or not.
I also wonder, with all of the crises going on in the world, if we were, say, 10 or 15 years ago, would we be seeing higher oil prices instead of lower oil prices now?
Much higher, much higher. I think if this was 5-6 years ago, the problems that we have around the world, I think we'd be back at $120, $150 crude easily.
And we have to remember, oil is a tax because it affects everything. We think about putting it in our car, but every single good you buy is somehow directly tied to oil because you need to transport it.
You hit the nail on the head. No, exactly, and it's really a regressive tax in the sense that it's a lot higher on lower income individuals.
Let me ask you about fracking now. Controversial, but how much has fracking played a role in sort of driving down oil prices and increasing our production?
Fracking has played a huge role. If you look at the production in the Dakotas, you look at the production in Texas, you look at the production in Oklahoma, these are pretty big numbers. As a matter of fact, just with the domestic oil boom, if you will, you take an area like California, where the housing market has actually started to turn. The one thing that they're having is labor problems and finding actual people, the construction workers out there, which a lot of them during, after 2008 and into the recession, moved on to greener pastures and moved to areas where there were jobs specifically into the Dakotas.
And Charlie,
so you're seeing big production out of those states.
And Charlie, we're also seeing a shift. We're not just producing it for ourselves, right? We're exporting oil more so than we have before.
Yes, we're talking about exporting oil, but you also have to look at, too, who else is using oil. And this is more recent than longer term, is China has been a big player in there. And that's always the thought that China was going to come in, and if our demand waned, that you would see China pick it up. Well, China will, source their oil from non-traditional sources. Then most recently, you have, you had mentioned the strife of the Middle East. You have the ISIL forces. From what I'm picking up from my people, is you're here that they're controlling about 11 wells in Iraq. Mm-hmm. They've got 2 refineries in Iraq. They've got 6 to 8 wells in Syria. Production numbers I'm hearing they're at anywhere from 800,000 to 1 million barrels a day, which they're selling into the black market for $25 to $60.
Charlie.
So again, I think that's also put a lot of downward pressure.
Do you think as oil prices drop that sort of our progress towards alternative fuels may stall along the way because there'll be less of an economic pressure?
I think the technology will move forward. Technology is kind of what got here, and I think what you'll see is your average, price of production start to go down as we do start to produce it and as we do start to put some of that technology to use. I also see just in the world market, just in terms of demand, I see us using less oil and less reliant on oil in terms of, and more efficient in terms of industrial processes, in terms of transportation.
Charlie Nedoss, thank you so much.
Thank you.
Time now for our business ticker stories making headlines across the nation and the world. The NFL Shield dented again, this time by its major sponsors, including Anheuser-Busch. The brewer is adding its voice to the chorus of disapproval over the league's scandals, though it has not pulled any of its advertising. Anheuser-Busch says it's spoken to the NFL about its role in the Ray Rice domestic violence incident and the child abuse charges against Viking star Adrian Peterson. Meantime, Visa, McDonald's, and Campbell's Soup have also voiced similar concerns. The NFL says, quote, "We understand." FedEx rates going up after the holiday shopping season. FedEx says U.S. rates for express, ground, and home delivery will increase by an average of 4.9% starting January. The price change comes as FedEx posted a profit of $683 and $6 million last quarter. A bellwether of the economy, by the way, is how much we ship. A big investor in telling DuPont that it's too bloated. Train Fund Management, the firm run by activist investor Nelton Peltz, is urging DuPont to break up into two smaller entities. The fund claims the chemical company is burdened by its bureaucratic structure. Train says the split would save the companies $2 to $4 billion in annual costs. DuPont started 212 years ago as a maker of gunpowder and today is best known for inventing polymers such as nylon. And a Chinese casino mogul now has about one Rolls-Royce for each day of the month. Stephen Hung has purchased 30 Phantom models for $20 million. He says it's the least he can do to transport guests at the new casino he's opening in the Macau territory. Two of the cars will have gold-plated accents and are the most expensive Phantoms ever commissioned. Imagine buying the insurance on 30 Rolls-Royces. I don't even know if you do. Ahead, a selfie surgeon is our favorite person of the day. You're watching Arise Exchange.
News can definitely be improved when reflecting diversity.
A lot of mainstream news, they don't dive into it.
Who wants to hear about negativity all the time?
They only show what they think people want to know and not what people really should know.
World-based stories, that's what I enjoy the most.
I think diversity of news is important to the world so that everybody will be aware of their surroundings and what is happening today.
Arise News, every culture, every angle.
I think that people in America do care about what happens throughout the world.
Global warming is probably something that has to be addressed sooner rather than later.
In Somalia and the genocide there, and that's something people don't know about. They have no idea the brevity of that situation.
First thing I think about when I think of Africa is like war and famine and disease.
And right now with the tsunami that happened or the earthquakes in, Japan, we always look out for other people.
Arise News, every culture, every angle.
Time now for our favorite person of the day when we pick one person who grabbed our attention and, not for the right reasons. Today, it is the doctor of Joan Rivers who took a selfie as she lay unconscious on the operating table. You'll recall that the late comedian died during an outpatient surgical procedure at a clinic named Yorkville Endoscopy. Reports say that during the surgery, an unnamed doctor who was not involved in the procedure was allowed to go into the operating room where he snapped a selfie. Rivers died when she went into cardiac arrest during the surgery. The medical director of Yorkville has stepped down from his position, and the incident is under investigation. No word on whether the selfie-taking doctor, though, will be punished, but he is our favorite person of the day. Next, how a good doctor is getting harder and harder to come by. You're watching Arise Exchange. Stay with us.
Well, Arise is the only network that really covers comprehensively the African diaspora. It gives people in other parts of the world of color a chance to know about people here in the United States, us to know about them, and the world to know about us. So it's kind of an educational experience for everybody involved. Getting to know people through stories, through personal stories. You really get a chance to know what people are actually all about, what communities are about. How are we different? But more importantly, what commonalities we all share.
Last week on Arise Exchange, the 13th anniversary of 9/11 unfolded the way the others have, with memorials and moments of silence. The Ray Rice fallout, the cost to the Baltimore Ravens and the NFL.
For them to deal with it the way they did, they clearly dropped the ball.
You know what we need protection from? People who wear Elmo costumes. The government forcing people who dress as SpongeBob SquarePants to get licensed. Maybe they need to see a shrink. I don't know about SpongeBob. Watch this week for more Arise Exchange. If you're having trouble finding a doctor, there is a good reason. The Association of American Medical Colleges says there's a shortage of approximately 91,000 doctors in the U.S., and that number is expected to increase by 2025. New York City, Los Angeles, and San Antonio are the three cities with the least doctors per resident, while Greenville, Atlanta, and Boston are the three cities with the most doctors per resident. according to betterdoctor.com. Here to talk about this is Dan Kogan. He is chief data scientist and a blogger for betterdoctor.com, a website which helps consumers find the top healthcare providers in their city. Welcome to Arise Exchange. First, how did you figure out what doctors, the per capita rating of the doctors?
So the numbers represent the averages of residents divided by the active primary care physicians.
You looked at primary care physicians.
Primary care physicians and the pediatricians.
Okay. So what, is driving down, do you think, these cities where the doctors are, there's not that many doctors? I mean, is the population simply growing in New York City?
The New York City is an outlier, obviously, for many reasons. High density, high population, and the very high cost of living. At $100 per visit, PCP cannot afford to have a practice. And we have neighborhood cities where the primary care can be delivered for the fraction of cost.
So are these cities doing anything about the shortages? Are you learning of any programs to sort of encourage doctors? I think of that show Northern Exposure. Do you remember where the guy was sent to Alaska because that's how he got his education?
Well, there are a lot of conversations about how to increase the rate of students going into the primary care specialty. Unfortunately, we're not privy to the information what CMS is doing, but what we know that entrepreneurs in every city trying to bring technology in 21st century, telemedicine, nurse practitioners.
It used to be so many people wanted to be doctors. Are fewer people going to medical school, or are fewer people going to these cities?
Fewer people becoming primary care physicians.
Why?
Most of them go into the specialties because specialists charge 2-3 times more per visit than the primary care physicians.
And they get more from insurance companies.
Correct.
Any data that suggests that the Affordable Care Act is scaring away potential physicians or current primary care physicians?
There is absolutely no incentives by the government for the primary care physicians to exist. The nurse practitioners do deliver the services, and the primary care physicians get much less than specialists.
And but that's a flip side of that question too, because there's an argument in other countries where the nurse practitioners do more. They prescribe drugs, they can make referrals. We don't do that here. Maybe part of the solution is to change the rules.
Absolutely. In 17 states, in fact, nurse practitioners do deliver the primary care. And in 3 to 5 years, we believe that in all states, nurse practitioners and physician assistants will deliver primary care.
So why did you go ahead and do this study? What is the benefits for the readers?
The Association of American Medical Colleges posts the numbers that by the year 2025, the shortage will be about 130,000 physicians, and we, as a data company that cleanse and validate the data, see that.
Okay, we talked about primary care physicians, but is there certain specialties where there are shortages as well?
In every state, the shortage of primary care versus all other specialties is about 50-50. So 130,000 physician shortage will be distributed between 65 to 65,000, all specialties versus primary care. All specialties have the same issue.
All specialties have the same issue, which is
shortage.
A shortage throughout all specialties.
Yeah.
And how much of that, from what you hear from doctors, let's say, are insurance rates and malpractice? I mean, the Doctors Association will say that it's malpractice insurance.
It's hard to say. It's many reasons. Insurances and malpractices is one of them, especially in the gynecology and obstetrics. But in general, it's the fee-for-service structure that basically prevents people from going into the primary care. That's where the biggest shortage is.
Talk a little bit about what your site does. Obviously, people shop now for healthcare the way we shop on Amazon.
Right, and it's true that people do go online more and more, but it's not as easy yet as shopping for the car. Our goal is to make it as easy. Looking for doctors sometimes can be as stressful as getting married, we heard, or looking for the apartment. We combine the multiple sources, we cleanse and validate the data, we present the information in such a way to make this experience
And what are the metrics
easier.
that you have? We have about 20 seconds left. What are some of the metrics? I mean, what makes for a good doctor?
Education, credentials, referring physicians network, feedback from the consumers, ratings.
Okay. Dan Kogan from betterdoctor.com. Thank you so much.
Thank you.
Terrific. Tomorrow, Scotland votes on whether to secede from the UK, and we will have continuing coverage on it throughout the day here on Arise News. Let's take a look at the markets once again. A record day again for the Dow Jones Industrial Average, driven up in part from those dovish comments from Janet Yellen. Low interest rates, easy money means more money goes into the stock market. It looks like that's going to continue for a while. I'm Andrew Schmertz. Thanks for watching Arise Exchange. We'll see you tomorrow.